And now it's time for Development Debates. We dig deeper into some of the questions shaping the future and present of China. Today, we'll see two Chinese experts debate if China's real estate market will collapse this year. Housing prices in China have been skyrocketing. Many have been shorting or avoiding the industry because they believe it's all a giant bubble just waiting to pop. The Chinese economy would drastically change if that were the case. But the government still supports its growth because it's where most tax revenues come from. There have been measures put into place to slow growth, but nothing so intrusive as to actually lower prices. Since 2010, after a series of restrictive policies in China, the pace hasn't slowed. Recently, the National Bureau of Statistics published data showing that last year, housing prices in first-tier cities saw over 20% in increases. Among the major 70 cities, only one of them saw housing prices decline in 2013. Accompanied by the rise in housing prices was the emergence of China's infamous ghost towns. There has been such a huge push on building infrastructure and houses that there are many cities that are almost completely empty. Recently, the independent economist Xie Guozhong warned Chinese media that China's real estate bubble could very likely burst this year. The collapse of the real estate market led China's housing prices to plunge by at least 50%. She has said that the U.S. quantitative easing policy withdrawal would stop overseas hot money from flowing into China's real estate market. Meanwhile, she has said the end of the demographic dividend and aging population would also hurt the market. She had pointed out that these elements would unavoidably drag down housing prices in China. Xia's idea might be a bit extreme, and this is why some others aren't buying it. An article written for National Business Daily has listed 18 reasons to refute Xia's idea. The article mentioned that since Mao's era, 1949, the government had already encouraged people to give birth to more children, which is why China's population is so large. But since the late 1970s, when China started its one-child policy, it still didn't stop population growth. The article mentions that as long as China's population keeps getting bigger, then housing prices will keep going up. Apart from that, the article also looks at the country's low urbanization rate and the potential for housing price increases. It says that nowadays, that China's urbanization rate is only about 40%. It's still 30% lower than the average level of developed countries. The low urbanization rate means that there would be a huge amount of Chinese farmers moving from rural areas to cities. These people would need to buy houses if they emigrate to cities. The article argues the huge market demand wouldn't let China's housing prices decrease. Finally, the article points out the real estate industry in China's small cities still plays a crucial role for the local economy. Tightening up on the real estate industry would decrease the fiscal revenues of local governments. This is the reason why local governments don't want to fall into line with the central government's restrictive housing measures. However, financial commentator Ye Tan holds a different point of view. Ye refers to an article from Forbes China that says if China's environment continues to get worse, then the country's houses would become worthless. Younger generations would leave the country instead of moving into heavily polluted big cities. This would keep aggravating an oversupply of houses. Ye believes that rich Chinese people would rather emigrate overseas instead of living in the heavily polluted big cities, and migrant workers would return to their hometowns to dodge the pollution. Ye also says that migrant workers might consider returning to their hometowns to work and buy houses. These people would eventually fill up the ghost towns. However, Ye also points out that these people are more likely to dodge poverty by urbanizing. A report from State Auditing Administration shows that over 40% of local governments use land revenues to pay off their debts. Chinese media reports that China's land revenues for local governments have created a new record high in 2013. As long as houses are one of the few safe investments for Chinese people, the prices won't drop. It requires a new source of fiscal revenues for the government to actually lower the prices and change that market.